I'm Henry Blodgett, back with the daily news analysis. Let's start with Apple. Absolute blowout earnings last night. What's going forward? What happens? Actually, we think there's a lot more where that came from. First, you have the Mac business, which is actually the sleeper business, but incredibly important to Apple, is starting to really reinvigorate itself. This was by far the biggest quarter they've ever had. Right now, as we shoot this video, the iTunes store is actually down, or the Apple site is down, because they are restocking it with new Macs. This is obviously going to help. But if you look at the trends in the computing industry right now, Microsoft's 20-year lock on the Windows operating system and the desktop is starting to break apart. This has really created an opening for Apple and the Mac business, and they are running through it quickly. They're gaining share incredibly rapidly, but they still have only a tiny slice of the computer market. So if you think about where they can go from their 8% or 9% share to 40, 50, something like that, there's a huge runway. Obviously, the iPhone business is just cranking, and we have several more new carriers coming on, new countries in this quarter. They are definitely becoming the de facto platform for development for mobile devices. So as far as we're concerned, the only route for Apple right now is up. We have the housing bubble back. Take a look at the slideshow that Joe Weisenthal put together. What were the ingredients of the housing bubble to begin with? Well, first, the government gave away free money. And it's actually the government this time as opposed to private mortgage lenders. But they are subsidizing, once again, 100% of the prices for houses for people who should never buy houses. You have now bidding wars breaking out in Las Vegas and elsewhere. You have a whole group of investors panicked that they're going to miss the turn and get in too late. So they are shoveling cash at people who buy up houses at foreclosure. So in a lot of markets, we don't have the soaring prices yet, but we've got all the hallmarks of a frenzy. This would be highly unusual if, in fact, the bubble ends this way with another bubble. So we are very skeptical. In fact, we think it's much more likely that we go into another year of downturn here. A lot of these folks who are jumping in now are way too early. This is just not usually the way you end the aftermath of a bubble like the one we've had. Stunned was the word used to describe the New York Times newsroom yesterday when another 100 layoffs were announced. Last time we had 100 layoffs, as we recall, the promise was that would be it. There was the brief salary reduction earlier this year, but now, in fact, there are more layoffs. If we look forward with the New York Times, we think certainly if the economy comes back, there will be a cyclical lift here, but long term, it's just hard to see how this business survives without a radical restructuring. We think that restructuring ultimately will lead to at least half of the jobs in the newsroom ultimately being eliminated. So we think it's death by 1,000 cuts. Unfortunately, this is the second one in recent years, and we think probably there will be more to come, although it does seem like management is being proactive about it and not waiting until they have a gun at their head. So that's positive. The good news is about 1 out of 10 magazines actually grew their advertising revenue this year. We had Condé Nast imploding, shutting down magazines all over the place, but there are 10 out of the 250 magazines out there that are actually growing this year. We have a slideshow taking a look at that. What you'll note is that most of those magazines are not news magazines, but they are definitely growing, which is good news. The stock market is more overbought than at any time in history, says John Hussman, who's a very well-regarded fund manager. He points back to a date in November of 1980, which we just exceeded on some of these long-term overbought indicators. Overbought itself is sort of a fuzzy term. But anyway, Mr. Hussman is very concerned that we're going to get a break based on that. It's a compelling chart. Take a look at that on the site. Inflation, everyone's worried about inflation. What we're seeing is deflation. Producer prices this morning dropped an unexpected amount. So yes, there is this possibility, in fact, probably likelihood that once the economy really does get roaring again and we get some of the toxic assets off the bank balance sheets, that we're going to see them start to put some of these reserves in play and you could get rampant inflation. But right now, the problem is deflation. And as Japan is demonstrating every day, you can go for an awfully long period in this time where you're trying to restoke the economy and you're in a deflationary environment before you actually become inflationary. So let's hope it doesn't take as long as Japan, but right now the problem is deflation. Virtual goods sales are supposed to double this year, so there is one part of the economy that's growing. And then lastly, Yahoo is very sorry that it hired lap dancers to try to convince people to develop for the yahoo.com platform. This was apparently, it seemed like a good idea at the time in Taiwan, but now the pictures are out and Yahoo is frantically apologizing. We have a good slideshow set up with all those embarrassing pictures on the site, so take a look at that. Have a wonderful day. We'll see you tomorrow.